Is it possible to transfer a property to your child and avoid both stamp duty, land tax and inheritance tax? Well, that's a great question, and it's something that we answer in this video, so go check it out. Abbas has said, how do I transfer my buy-to-let property to my sons without incurring stamp duty? If this is not possible, how can I leave the property to them with no or little inheritance tax? So over to you. What's the view of reducing stamp duty, land tax and inheritance tax? And first of all, let's think about this. When do you pay stamp duty, land tax?
That's a great question. So just to be clear, from the question that was asked, it did say, how do I prevent stamp duty? Now, stamp duty is something quite separate, although connected in the same body of tax, as you might say. But actually, what the kind of tax that you would pick up potentially is stamp duty land tax. So we just want to be really specific on this point. Stamp duty land tax is incurred typically when you are buying a property. And the amount of stamp duty land tax is typically connected to the value of the asset that you are buying, or rather the debt that you are, for want of a phrase, incurring. And also it's connected to the type of asset that you're buying. So is it residential or, very technical here, non-residential? So depending upon which one of those they are, depending upon the value of the asset you're buying, and there are some other reliefs around it, which I'm not going to get into detail on tonight, will determine how much stamp duty land tax you have to pay. And you have to pay it quite quickly as well. So after you've forked out for buying a brand new asset that's probably cost you an arm and a leg, to say the least, get ready to pay within, I think is it 14 days?
14 days.
Get ready to pay in 14 days a percentage of that purchase price straight over to the stamp duty office.
And which I would also say is make sure that you check and double check what the solicitors are telling you to pay in regards to stamp duty, land tax. We're seeing an awful lot of solicitors making mistakes, using generic HMRC calculators and then getting that wrong. So as an aside, double check those calculations. Okay, so that's stamp duty, land tax. So think about how we might mitigate that. And the crucial thing there is, if there is no consideration, there's no SDLT. So a gift would suit that. So if you are thinking about mitigating SDLT, surely enough, is get rid of the property with no consideration, as in do not accept any money from your son, or even the clearance of debts from your son as well. So if it has a buy-to-let mortgage and they clear it, that will be considered consideration.
The jokes
need to work on that one.
People.
I need to work on it. Yes, the jokes are as ugly as I am. So let's think about inheritance tax. Louise, when do you pay inheritance tax? Because I'm going to be paying very special attention to this next.
Well, oddly enough, there are two times when inheritance tax is incurred, typically. Firstly, it's incurred, sadly, at someone passing and their estate being worth a certain amount of money over the inheritance tax threshold at which inheritance tax is paid. But the second time is actually whilst you're still alive, which is really quite worrying. And that is typically when you transfer a particular type of asset into a trust, not a bare trust. There are lots of different trusts out there, but bare trust is not classified as a trigger for inheritance tax in those instances. But typically, if you're transferring into a trust, you're possibly going to pick up inheritance tax at a bargain rate of just 20%, Simon.
Just out of interest, that trust, is it a grizzly or a polar?
I'm not even going there.
Right, okay. So I think if we answered that then, so inheritance tax, it's stamp duty, land tax.
I'm not sure. Perhaps
so let's convert it off.
Us.
So maybe what the idea is, if you want to mitigate both inheritance tax and SDLT, the quicker you get rid of an appreciating asset, minimizes the inheritance tax. If you gift an asset and you survive for 7 years, then it would not be subject to inheritance tax. So if you gift it, no money consideration at all, within 7 years, it is going to be free from SDLT and free from IHT. That is the best way to do it.
The only downside, of course, is that in the process of handing over that asset to somebody as a gift, you may still incur capital gains tax. And so you really need to work with your advisors to establish what amount of tax you're going to pay. It's a very rare beast to see it, but you might find yourself picking up a bigger tax bill because it's capital gains than you might have done if you'd considered stamp duty. Yeah. So just bear in mind that there are lots of different taxes out there, and you might get out of one, but you incur another It's working out which one is the lower option for you.
That darn ugly beast. Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.